Well, as you may have heard, we've ended up with a minority government led by the Liberal Party in Canada. Justin Trudeau has lost his majority. However, he's got a large enough plurality of seats that he has the ability to make ad hoc alliances with 3 other opposition parties. Having a minority government is actually not unusual in Canada. 11 of the 24 elections since the Second World War have been minority governments, and on average the last 2 years. So this is actually very much a normal situation in Canada. And in fact, the situation where the Liberals form the government without winning a seat in Alberta or Saskatchewan is very similar to the situation his father faced, where he didn't win a seat in the West either. It does reflect economic and regional tensions in Canada, but Canada being one of the most decentralized federations in the world, this also is not unusual. Certainly, we'll see, I would expect to see him working hard to try and ease some of these tensions and answer some of the concerns that these electors have. On the whole, though, I don't expect it to affect the economy very much. You might see a little bit more deficit spending, but the Canadian federal finances are in good shape, and I wouldn't expect it to have any effect on our free trade negotiations with the United States and Mexico, which are currently stalled as they're still working their way through the US Congress. But I imagine that if they are approved in the United States and Mexico, then Canada would continue to approve them as they are negotiated at present. Well, the Canadian economy remains a beacon of stability. It didn't have a housing or bank crash, and it's led the G7 in GDP and jobs creation since before the crisis, and it remains quite strong despite the trade tensions we have with the United States and with China. It continues to feed into the robust U.S. economy, but like that economy is cooling off a little bit. The one area of concern that remains concern is housing and the high level of household indebtedness, which pertains mostly to the housing market. But you've seen the house prices come off in both Toronto and Vancouver, which were the most overheated markets, and then you've seen something of a recovery in them. So I don't think we have a tremendous worry about housing. If you look at those markets, you can see by most indicators that they're in balance. Well, we did increase the amount of borrowing, but the level of gearing isn't significantly higher. In fact, it's in line or at the low end of the range for our traditional levels. In gross terms, it's under 20%, and in net terms, it's just over 16%. So this is a level of gearing that we feel is appropriate for the fund, and that the fund is well able to manage over the longer term. And while it does add potentially to up or downside returns, it also is significant enough to make it worthwhile. We've engaged in a gearing strategy since 1998 with similar or higher levels, and this has been a very accretive strategy for our common shareholders. Starting in 2013, we announced that we were changing how we were going to pay our dividends. We were going to progressively pay more and more through the quarterly dividends and eventually eliminate the year-end special dividend, while still making use of the dividends paid out of income and the capital gains dividend facility. Last year was the first year that we didn't pay a year-end special, and now this year will be the first year that we've actually increased the total distributions under this new regime. And then the intention is from the board is to provide steady to rising dividends going forward on an absolute dollar basis. Well, as our practice, the portfolio activity has been fairly restrained. Our turnover ratio is typically fairly low, and it has been again this year. Despite the sharp downturn in the markets at the end of last year, we left the portfolio mainly intact, and because of that we've had a very sharp rebound this year, and we continue to lead our benchmark by a significant measure as of the end of October. And this is in line with our tradition of trying to beat the benchmark, which we are ahead of it over the 3, 5, 10, and even the 25 and 50-year period. We believe that the portfolio remains well positioned for the current market conditions, but of course, if there should be a market change in the market conditions, then we are ready to make the changes that are needed.